Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on SBUX, ticker SBUX. Now why are we doing analysis on this? Well, you can see it's not been as volatile as some of the other stocks, especially on Friday's close, as it closed up around 0.5%. But this is a stock that is coming to a very good buying opportunity for us, and is nearly an A quality setup. It's just missing kind of one part of that, of what we'd look for in a perfect setup. But either way, we'll go through the analysis. You can see if you like it, if you don't, and we'll just give our overall price targets on what we expect to happen with SBUX looking, a week or a month, or even a few months into the future. Now, as always, we start off in a clean daily chart so we can see where are our gap fills, and we can use these as some sort of profit targets. Again, we don't tend to buy off gap fills, but we do like using them for profit targets. When looking for our gap fills, we like very obvious ones that whether you're looking for gaps or not, it stands out. So by that, I usually mean ones that aren't touching. So for example, ones like this, gap fill at these, really they're the three key, and I guess this one, but that's quite far away. So kind of 125, 111, 107, and 100 are all kind of gap fills that stand out to me as soon as I look at this chart. And so are ones I wouldn't mind using as price targets. But now to get straight onto these standard deviation charts, because this is where we're going to get the majority of our price targets, we can see that SBUX actually right now is below its third deviation, which is a great thing if you're looking to get long. Whenever you see stocks at any deviation, you expect a bounce, but when you see a stock at its third deviation, that is really where we like to be trading, because these are the highest probability setups. Now why is that? Well, if you know what standard deviation is, whether you learned that at school, it doesn't just have to be trading related. I mean, standard deviation is just a concept in general. But you expect between the first deviation, so in our case these golden ones, 68% of the stock data to be there. Between these blue ones is the second deviation, you expect 95% of all data to be there. Finally, at the third deviation, you expect 99.7% of all stock data to be within those deviations. So when you see a stock at or below its third deviation, more likely than not it's going to correct itself and push back into the third deviation, and over time push back into the second, over time push back into the third, and then eventually reverse to that statistical mean. So when we see stocks like SBUX coming down at these levels, it's a very great or kind of low risk buying opportunity, and it's why it's something we're looking at very long buys at the moment. Also, what's nice and we're starting to see on SBUX is it's starting to form a divergence on the 4 hour. So if we go over to the 4 hour chart, we can see whether you're looking at more of a longer term one. So obviously if we look all the way back here, that is a very obvious divergence, but I tend to prefer to use the two most kind of recent times it's gapped to oversold. The reason for that is they tend to just have work a bit better. But either way, looking at this, we can see it is a divergence, very small. As you can see, well actually here it did kind of break this divergence, but if we're looking at this part here, we can see very clearly still that even though, as we can see, price, this was when it was at around $100, we have sold off about another 5% from there, and we can see that the momentum to do that is been getting weaker and weaker, which signals more likely than not there's going to be a reversal, especially when we're at a third deviation. So overall, on SBUX, high probability that this will kind of be the bottom, and we expect a bounce from here. Now where do we expect this to bounce to? Kind of what are our price targets? So our price targets always at first are going to be that next deviation. So in this case, and we'll actually clear this, obviously you have the gap fills, take into account those if you want to use them as profit targets. But now we're just going to be looking at straight standard deviation price targets, because these are going to be the main ones that we do use. And we can see at around $101 and 103 are where we have our second deviations on the 4 hour and the daily. Now here we always like to use kind of the next set of deviations as a place to at least move our stop, if not lock in some profits as well. And as price continues up, we can then use those next set of deviations. So in this case 106 and 109, again we most likely lock in some profits at these, and again move our stop if we haven't already. And then when are we going to look to be out completely of this trade? In SBUX case, $110. And why is that? That is the closest statistical mean we have. So the 4-hour statistical mean is $110, and the reason we want to lock in all profits kind of at this level is stocks try to reverse this statistical mean, or everything, kind of whether you're looking at stocks or not. If you've got standard deviation, you expect it to return to its mean at some point. So when a stock has returned to its mean, it's much more of a gamble whether it will go up or down from then on. So if we can lock in profits at statistical mean, we're kind of getting that optimal kind of selling zone while taking risk and kind of time into account, because it may continue higher but could take quite a while for that, whereas this we kind of get out at the optimal time. So really they're going to be the key targets we're looking at, and so if we're looking at now exactly where price is, so we can see it's around $96.25 to our final target. That's providing around a 50% upside. And if you're looking more for kind of day trade or very short-term swings to just the next deviation, that's still providing around a 5.5% upside. So either way, it looks like it's a good trade. And again, you can trade these in any way you like. Obviously, you'll have your own strategy. But either way, you can trade these with just shares. If you're somewhere like the UK or where CFDs are legal, obviously you can trade with CFDs. Options, obviously you can trade options in many different ways. You could just be buying a straight call. You could be selling cash secure puts at a price below where we are now, for example $95, and kind of all that kind of stuff. But I mean, these, what we give in these videos are more just price targets on where I expect price to kind of move to. But you should have your own strategy to actually be taking these trades. But either way, I hope you enjoyed the breakdown on SBUX. Hope you see you in the next one, and that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay?